How's it going, everybody? It is Dennis, and we're back with another video talking about YieldMax ETFs and how they have performed for 2 years in my portfolio. It's been 2 years of owning these YieldMax ETFs, both TSLY specifically. AMZY and APLY have been around 21 months, as you can see on the screen. And the last time we did this video was last year of 2024 in May, and this year of 2025 we're doing it in May once again. As you guys may or may not seen the video from a year ago, I made a video talking about YieldMax ETFs. We got 21,000 views, 493 likes, so hopefully we could get something similar in this video. But besides that, last year we went over these funds right here: TSLY, AMZY, APLY. Let's go ahead and zoom in so you can see better. TSLY, AMZY, APLY, GOOY, YMAX, CONY, MSFO. We have exited CONY and we've exited MSFO, so you will not be seeing these. We have entered AMDY and we've grown our positions in all the other funds. So let's go ahead and get straight into the data, into the information, and see how they've performed in the past 2 years in my portfolio. So let's start off firstly with TSLY. So looking at TSLY, the current share price at close is $9.05. This is of Thursday, the 15th of May. We're at $9.05 at close for TSLY. The share count we currently hold is 475.71 shares. Robinhood is quoting us at $10,142.41 estimated cash invested into Robinhood. I say estimated and I say Robinhood quoting because this may or may not be how much cash I originally put. This is one caveat of this video and last year's video, is that I do not have direct knowledge of how much I invested into these funds. So it's kind of hard for me to say that I'm profitable or I'm not, but I could just go off based off Robinhood's data. And as we know, Robinhood does not does not show us our dividend return. It only shows our value return. So we're going based off of that. We're going off the return that Robinhood is giving us based off value and not based off the return of dividends. When it comes to the cash value, we're going to look at dividends as well and see how that correlates with the loss of value and if we're profitable afterwards. But just letting you know, this is not exactly how much I put in cash. 2 years ago, when I started investing in these funds, I did not have $10,000 to throw into TSLY. I did not have $5,000 throw into AMZY and so on. So just to be noted. So let's go ahead and move on. Current cash value, as it sits in Robinhood, is $4,276.67. The average cost per share is $21.32. As you may or may not know, this is after a reverse split, reverse split. So we did have the reverse split, and therefore my $21.32 average cost is quite high. But we've been lowering it over and over time. And of course, our cash value gain and loss is negative $5,865.74. So this is what Robinhood is quoting that I have lost in value. That in percentage scale is 57.83%. So negative 57.83%. And our dividends earned for these past 2 years is $6,877.09. For the past 2 years, we've earned $6,877.09. Some of these were reinvested fully, some of these were reinvested 50%, and some weren't reinvested at all and put into other funds. I'm going to go into detail more of that into the later section of the video, talking about year 1 compared to year 2, and how I'm calculating and what the reason is for such differences in growth from fund to fund. So let's go ahead and continue with it. So months invested, 24 months, and a total after canceling out the cash value gain loss, canceling that out of the dividends earned, is $1,011.35, or a 9.97% gain. Now, once again, this is not 100% accurate. I do not have exact numbers on when I reinvested and when I did not reinvest, especially with Robinhood after the reverse split. The numbers were completely erased. The history was erased. So it's hard for me to know what was reinvested, what was not, especially after that reverse split. Not only that, but I did not track how much I reinvested and how much I did not, how much I took out in cash and where I put it. Of course, I have buys and shares, and I could go through my whole list, but that'll take me a whole year just to put that all together. So Currently, we're just going to do the basics: value loss on paper from Robinhood and dividends gained. and that's how much we're going to have a profit, which is $1,011.35. It could be lower, it could be more, depending on if we're calculating the dividends reinvested and dividends not reinvested. But as we sit right now, we're at 9.97% gain with TSLY. So 2 years have went by and we're up 9.97%. With AMZY, moving on to AMZY, there is current share price of $15.80. We're sitting at 316 and 316.5 shares. Estimated cash by Robinhood, once again, is $5,683.27. Current cash value is $5,011.98. So you can see the loss of value was a lot lower than it was for TSLY. And we know that because TSLY did have poor performance and also prospectus changes that happened. YieldMax kind of came in late, so it's kind of hard for TSLY to recover. And plus TSLY, the underlying moves a lot more. So we all know that. We know the gist with TSLY. I don't need to go over it all the time. Most of these funds will perform better than TSLY. But you'll see at the end that it doesn't mean it's better. Just because on here on paper, it looks like it performs better. If you look at the graphs, which we'll look in a little bit, it doesn't mean it performs better. So AMZY, a current average cost per share is $17.96. And cash value gain and loss is negative $671.29. Percent value gain loss is negative 11.81%. Dividends earned is $3,302.09, and we've held this fund for 21 months, so not just a year, with 3 months off of a year. They did launch 3 months from when I bought TSLY. I bought TSLY in May, of course, the year mark, and then I bought AMZY and APLY later on in the summer when they launched. So the total earned with the loss of cash value is $2,630.80, or 46.29% return in a little less than 2 years. Once again, take these numbers with a grain of salt. We're going to look ahead and take a look at graphs later on and see what the numbers would be if you're constantly reinvesting, if you're starting with one share or say one cash amount, and how much that return would be with dividends reinvested. Now, moving on to APLY, $13.45 is current share price at close. We have 303.09 shares of it. Estimated by Robinhood is $5,218.31 put into the fund, and $4,097.72 is the current value it sit at. Our average cost is $17.22. And our value gain / loss is $1,120.59, or negative 21.47%. Dividends earned is low. It's $1,469.39. We do know Apple, the underlying, has low volatility, therefore premiums are low. They sit around the 30-40 cent mark. And we got 21 months of holding this. We bought it the same time we bought AMZY, and our total is $348.80, or 6.68%. Now, we move on. We take a look at the last three. We have GOOY. GOOY is currently sitting at $12 per share at close. We have 335 shares of GOOY, and it is $5,247.65 is how much Robinhood says we have in value. The cash value currently, or how much we put in originally with value, the current cash value is $4,036.74, and our average cost is $15.66. We have lost $1,210.91 on value, or negative 23.08%. We've earned $1,562.98 in dividends, and we've held it for 19 months, so even less than the others. As you can see, it'll get lower and lower as these funds go on. So $352.07 is how much we're coming out of this after 19 months, or 6.71%. If we take a look at this, assuming that it continues at this trend, and assuming that it continues at the trend it's heading, in 21 month time, it should be beating APLY, but it will be underperforming AMZY. But we'll take a more of a look at all the funds in a second. I just want to go through the data first before we go over the summary and my opinion of it. Then we have YMAX. YMAX currently closed at $13.75 of recording this video. And we have $648.35, or 648.35 shares that we hold. Current value that Robinhood estimates we put into YMAX is $11,312.68. Cash value is $8,921.27. Our average cost is $17.45, and we've lost negative $2,391.41 in value, or negative 21.14%. We've earned $3,351.26 in a matter of 16 months in dividends, and that leaves us with $959.85 earned, with the value loss counted out of it or subtracted from it. And that's 8.48% of growth in total dividend value made by YieldMax. So lastly, we have, let's go ahead and expand this really quick. We have AMDY. AMDY is our newest position. We've been holding it for 8 months. I haven't been adding much shares into it, which I should be, especially now at the lows and AMD rising back up. Hopefully continues to trend that way, but current value is $7.80 on AMDY. We hold 244 shares, and the value that we've inputted into AMDY on Robinhood's estimate is $2,881.13. It currently sits at $1,912.11. Average cost is $11.81, and we've lost $969.02 in value, or a negative 33.63%. Dividends earned is $545.27. We've held it for 8 months, and we've lost negative $423.75 on it, or negative 14.71%. Now that we went through all the funds, total estimated value on all the funds I hold in my portfolio is $40,485.45 was inputted into these funds. So we have $40,485.45 being put in cash value into these funds. Out of that, we have $28,256.49 left in value in these funds. We've lost negative $12,228.96, or negative 30.21%. We've earned $17,108.08 in dividends, and $4,879.12 is how much we're coming out in profit, or 12.05%. Now, what I mean by this isn't accurate, that isn't 100% accurate, is because this is over 2-year time frame. The cash value that it's estimating here is cash value earned from options, cash value earned from growth in the other funds that I own, long-term growth funds, and I didn't have $40,485 I put in liquid cash into the fund. I did not start with $40,485.45. I started around the $28,256.49 mark that it sits now, but I didn't start at $40,000, especially with the fact that I also have options portfolio side, and 2 of my contracts alone are around the $20,000 mark on SPY. So that $40,045.45, like I said before, is not the cash value that I put in myself on my own with my cash earned outside of the portfolio. So this is with options earned, dividends reinvested, all of that sorts. So once again, this is not 100% accurate on how these funds would perform. We're going to take a look at the graph in a second to look at how these funds would perform if you're just putting one single amount inside of there. So say $10,000, $100,000 into a fund and reinvesting those dividends and how they would perform. But first off, let's just take a general look at the fund. So TSLY, or at the portfolio, TSLY 9.97%. This is, like I said before in many of my other videos, I'm pretty sure I've broken even on TSLY. Like I said, a grain of salt, I can't tell you 100% if I have or have not. If I have not broken even already now, I'll probably break even towards the end of the year of 2025. So 2.5 years into owning TSLY, I'll probably be break even, assuming TSLY doesn't go down even more. If it does, still the dividends are $6,877.09. In my mind, in my recollection of 2 years ago, I don't think I put down more than $6,877.09 in cash into TSLY. I think I put more like $5,000 into it in cash. So I don't think that's how much I put down. I'm pretty sure I've broken even at this point, but hey, take it with a grain of salt. This is just the data I have and I've collected. So $6,877.09 earned, assuming we're able to get a couple more dividends in by the end of the year, assuming we get another $3,000 in, we'll be at a 10,000 mark in dividends earned at 2.5 years of owning these TSLY, or a little bit over 2.5 years. So that's going to be interesting to see. We're going to be hitting 5-digit mark with TSLY soon on dividends earned. And like I say all the time, these funds will continue to pay, assuming their underlying stay, assuming you reinvest a little bit into them, 50, 25%, depending on how much value you want to stay in these funds. And we're going to take a look at a graph and you'll understand what I mean by that. But the $6,877.09 earned is not too shabby. Like I mentioned before, some of this was reinvested, some of it was not. Some was even taken out of the account and used for other reasons and put into other places. AMZY, $3,302.09 earned, 46.29%. AMZY is actually a pretty great performer. You guys, once again, will see in the graph, AMZY performed very, very well. Amazon, the underlying, is very stable at growth. Doesn't have a lot of drops down and recovers quite smoothly even when it does have drops. So AMZY, the underlying is, or AMZY, the ETF, is able to capture the upside. So it drops slower, by the way, than Amazon does due to the covered call on its premium. So you drop lower and you're able to capture the upside because of the slower growth to the upside on Amazon, the underlying. So that's a really good fund. APLY is a little bit so-so. It's similar to AMZY. It performs quite well. You can see we're positive on 6.68%. But it does perform a little bit worse because Apple, if it drops, it then spikes back up. It's a little bit more volatile than AMZY, even though it pays less, which is quite weird. Maybe the managers who fund APLY just aren't able to get a good coordination on, timing specific calls on Apple, the underlying. Not sure what's going on there, but performing a little bit less than Amazon is, or AMZY. GOOY is another one that's a little bit on performance. It is higher than APLY technically from the data I have, but if you take a look at the graphs, it's not the greatest fund you could have from YieldMax ETF. Out of the 2 years or a little bit under 2 years it's been out, it's kind of just been stagnant at 0% growth, even with dividends reinvested. And that's the data coming back from the charts with dividends reinvested. So kind of on GOOY, but we'll continue to own it, see where it goes. Like I said, once they pay itself off, technically it's free money. No such thing as free money, but you know what I mean. You pay off your original value invested, similar to like if you buy a property, the property pays itself off, it has no more mortgage on it. All that income coming in after that is just pure profit. No need to go ahead and allocate it unless you're paying taxes, or allocate it into a mortgage or anything of that sort. So the only thing you'll have left to pay is taxes, insurance. In this case, you're paying either your margin or you're paying your taxes, right? With the dividends earned. YMAX, $3,351.26 earned. This one performs very closely to the S&P, tracks it very well. Actually, last year on the 1-year chart in 2024, it outperformed the S&P by, I think, roughly 1 to 2%. So quite interesting. That is because it also has all the single stock ETFs that YieldMax has, and a lot of them are very volatile and move more than the S&P does. So like Tesla, NVIDIA had a great run in 2024, so that's probably what boosted YMAX's return and growth in 2024. But we've had this for 16 months, so a little over a year, and it's paid us $3,351.26 and performed, or given us back 8.48%. So not even hitting the 2-year mark, even though this has a 40% annual return, it hasn't even hit the 2-year mark, and it's already green on returns on paper from what I have, of course, from what I have. But on the graph, it's still great performing, even if you look at the graph and the reinvestments. Now, AMD, new position. I think I bought this one a little bit too early. I was betting on AMD going back up and trending upwards. Bought a little bit too early. I'm probably looking into buying some more shares now while it's at its somewhat lows. I know it's trending back upwards, but hopefully it doesn't shoot up too high. I know they're doing deals here and there, and they're performing quite well on their finances and their business. But we've earned $545.27. Unfortunately, we've lost more than we've earned, but over time, it'll balance each other out. You reinvest a couple dividends here back in, you keep your dividends coming in stable. They've actually been pretty stable, surprisingly, even with the loss of value. And slowly but surely, the dividends earned will outpace the amount of value lost. So, negative $423.75 is what we sit at the 8-month mark, or negative 14.78%. Look out for the 3rd year of holding this YieldMax ETF video in 2026, and you'll see AMD is probably going to be green. It'll probably be around the 6 or 8% mark, or even higher, because AMD has a quite good volatility and premiums that they pay out. So AMD has, I think, a 60% return, 70 if I'm not wrong. I don't know if it's changed since the last time I looked. I haven't taken a look at AMD's percent return, but just watch out for next year. This will probably end up being green too. So overall, we're up 12.05%, $4,879.12, earned a total value of $17,108.08 in dividends. Quite nice to see. Now, like I was talking about before, let's look at the graph, right? Let's take a look at the graph. Let's go ahead and zoom in so you guys could have a better look at this. If we go ahead and zoom in, we could see, if we look at SPY has returned 45.29% since May of, what is this? This is May of 2023. It is. So since May of 2023, this is going based off when I started purchasing YieldMax ETF. So since May 2023, S&P has returned 45.29%. Now, this is what I'm saying. This is a big surprise for some people, but TSLY in that meantime, with dividends reinvested, so if you look at metrics and you look at performance, total return, so with dividends reinvested, is 47.23%. Now, I didn't have drip on all the time. There was times where I was buying at the lows, right? I was buying at the lows for TSLY, and maybe I was buying at the highs. So my returns might be different from this chart. This is assuming drip is on and you're reinvesting with the drip, you would be at 47.23%. Surprising, I know. TSLY is actually profitable over the almost 2-year mark, right? Now we take a look at AMZY, 60.47% on AMZY, higher than the S&P by almost 15%, by 15%. And it started later than what we have on the chart. So it started almost, what is this? May to, where did we start? We started in late July. So from May to late July, so what is that? That's 2 months. In 2 months later start, and we're at 60.47%. And if you look at the graph, right, if you look at the purple line, you can see the growth is steady. The reason is because Amazon's growth is steady, right? It's perfect for these funds when the growth is steady, when the growth is calculated, and they're able to do the correct runs on it. And as you can see, even when we had the dips around, what is this mark right here? Around August 2nd of 2024, we had a dip in the market, and then it performed once again, steady climb upwards. And of course, then we had the dip towards December and then into the election time here in 2025, and it started going down with the market, but it still ended up on the upside. Look how well AMZY has performed with dividends reinvested. So many people say these funds will underperform the S&P. They're not worth the investment, but look how it's performed. And now look at APLY, 11.32%. Like I mentioned before, APLY for some reason just doesn't have that treatment. I don't know if they're just not able to play Apple the same way they play Amazon. Does Apple have more spikes than Amazon does? It doesn't look like it does, right? It looks pretty steady to me, but they're just not able to perform as well as Amazon does. It might be because volatility might be lower. In that case, then maybe the dividends are not be able to offset the loss of value on the upside. I don't know. But even worse is GOOY. GOOY also started around the same time as AMZY, 2 months later than our start date, and it's at 0.65% return. So assuming you were taking 50% out of your dividends and not reinvesting the full dividends in, you would be in the negatives. You would be in the negatives. Or actually, no, you wouldn't be in the negatives. You would be at negative. You would be at 0.3% return, 0.325% return on the what's it called 2-year. So quite sad to see. Now AMD started even later than all the other funds. It started even later, and that's at negative 0.27%. But as you can see, it's trending upwards and quite fast. So if you were buying dips now, it would be a good time to continue to buy. It hopefully continues to trend back upwards with the market, as well as AMD and the good news that they're getting with them possibly trending back upwards and getting close to NVIDIA levels, or competing with NVIDIA once again. So negative 0.27 on AMD. On YMAX, we have 28.01%. 28.01%. And this fund launched in, what is this, in January of 2024. It launched a whole 7 months almost, right? 7 months after May. And it's at 28.01%. Of course, it's lower than S&P of 45.29%, but S&P had an extra 7 months of growth time. If we were to condense this chart and look at them from YMAX to S&P, they'll be quite close to each other. We're not going to do that because that's not what the video is about. But YMAX and S&P would be very close to each other, very competitive, very similar, and that's the great part about the diversity of YMAX. So even with the negative percentage on paper on Robinhood, like I said before, they don't calculate dividends that well. With Robinhood, I don't think they calculate at all with dividends return. So 28.01% earned with YMAX. So it's a very good competitor. If you were to take 50% of that out, right, in cash, then instead of 28, you would be at 14% return, but you're still positive on that 2-year, or not even. Technically, that's like a 1.5 year, right, on YMAX. So you would still be positive 14%, and the other 14% will go away in cash to you. So these funds work. A lot of people say they don't, but look, they do. It's on the graph. You could tell me that they don't all you want, and you could say there's taxes on it as well. Sure, there's taxes, but you are still coming out profitable even after paying taxes with TSLY, AMZY, APLY. If you're so worried about taxes, try and find ways to kind of negate those taxes. Take out margin. Margin interest is tax deductible to a certain extent. Maybe you have some losses in your account. You could cancel that out and also deduct your tax return, right? There's a lot of ways you can work around taxes. I'm not a CPA. I have my own ways to limit the amount of taxes I have to pay. And therefore, for me, these positions are profitable when it comes to tax season. Now, we're not done just yet. Let's go ahead and take a look at how they've performed compared to the first year. Now, this is where it's going to get a little bit weird. So let's go ahead and scroll down, and you might be seeing the purple colors now popping up. The reason for purple, and I have it labeled here for myself for the future because I did this a day before I put this together. Purple equals could be inaccurate due to unknown cash movements from other holdings. So pretty much what I did here was I looked at what the estimated cash by Robinhood was 1 year ago. So we take a look at TSLY, right? TSLY was $9,022.72. Now it is at $10,142.41. So we have $1,119.69% or 69-cent increase of estimated cash in by Robinhood. So we've increased in cash in, right? This could be, like I said, the reason this could be inaccurate, and I wouldn't take this as like, God's word. This is just a grain of salt. It's not accurate whatsoever. This is just data that I have to my disposal, and I'm trying to demonstrate as best as I can. But $9,022.72 compared to $10,142.41. You can see that we're up $1,119.69 cash in. Where did that cash come from? Dividends, options. This cash did not come from me. I have not been adding cash into portfolio to the scale of where $1,119.69 would be the increase. And this is for most of these funds. You'll see in a second. I did not put that much cash in. Most of my cash has been going into bonds, especially right now in the market. So this is not my cash going in here. This is dividends and options. So that's why I'm saying this could be this unknown cash. I don't know where this cash is coming from. It could have been from options income, right? And option income then would skew this, right? Because Robinhood sees that as cash coming in from a different source and not dividends being reinvested. So take this with a grain of salt. But $1,119.69 is how much we've increased in value of estimated cash from year 1 to year 2 of TSLY. That's an 11.04% increase. If we take that increase of 11.04% and the total increase that we have of 9.97%, we're left with $2,131.04 earned total, or 21.01% total gain. Like I said, take this with a grain of salt. This could be completely inaccurate, but if you think about it, if we take a look at the charts, it could be accurate. If 47.23% is the return on the 2-year, right, for me holding the fund, 21.01% seems pretty accurate. And like I said before, a lot of the money was mostly being taken out and put into other funds. So this seems pretty accurate to me. Take it with a grain of salt, but seems pretty accurate with how I remember taking out the money. Like I said, there's times where I'll take it 50-50, 25-75, or all in total and put into other funds. This seems pretty accurate. 21.01% return for the 2 years. This is what I think is a real return. The 9.97% is not calculating this cash growth from 9,000 to 10,000, right? So let's go ahead and continue. We have AMZY, $5,683.27 compared to year one of $4,149.11. That's about $1,534.16 return, or increase, or a 26.99% increase. Add that on to the dividends minus the value loss, and we're sitting at 73.28% return, or $4,164.96. Take a look at the chart. AMZY is sitting at 60.47%. This is where I'm saying, take this with a grain of salt. 73.28% is higher than the 60.47%. But don't forget, TSLY is lower. So why would be TSLY would be lower? Because we took TSLY dividends and put it into AMZY. Therefore, AMZY would have a higher return based on original investment, right? Based on original cash investment, because we took dividends from TSLY and put it into AMZY. No outside cash was put in. This is TSLY dividends being put into AMZY and increasing the percent return of 73.28%. Take it with a grain of salt. I may be completely wrong. I am a lot of times. But based on, in my mind, in my calculations and my math, 73.28% kind of makes sense if you're adding not outside cash, but dividends into AMZY. So let's continue. APLY, 6.68%, right? We had $3,241.35. We went up to $5,218.31. $1,976.96 was the total difference between year one and year two. That's 37.89%. We have a total now of $2,325.76 in profit, or 44.57%. Once again, APLY says 11.32%. Our numbers say 44.57%. Take it with a grain of salt. But it is possible if I took the TSLY dividends and put it into APLY. It is possible if I took the YMAX dividends and put it into APLY, or if I took the AMZY dividends and put it into APLY, right? I don't know where my dividends went, to be fully honest with you. I don't know where my dividends went when it comes to distribution. I know how much I've earned, and I know how much the value that I have currently, because Robinhood tells me, right? I have all that charted down, but I don't know where it went exactly, right? I don't know that. And that's a lot of things that you would have to write down, and maybe I could do it for this next year, for 2026, to have a little bit more accuracy for you guys. But 44.57% based on the cash increase as well as the dividends earned. So take it as that. Now we take a look at GOOY. At year two, we're sitting at $5,247.65. We started off with $1,832.41. That's a $3,415.24 increase by 65.08%, or 71.79% profit, or $3,767.31. Once again, this one's probably 100% off, but I'm just throwing these numbers out for you just so you guys have it. This is probably 100% off because 0.65% is how much it says the total return is since inception. Probably 100% wrong. I'll probably accept that this one's probably wrong. 71.75%. I highly doubt I was able to just increase it by that amount. But this is just cash value growth and dividends earned. So I guess, like I said, there's a reason this is purple, not green. This is possible returns. Possible returns. Is it accurate? Probably not. Probably not. So let's take a look at YMAX. $11,312.68 is where we're sitting at year two. We originally put in $3,488.17. Now for YMAX, I can confirm for YMAX, I did not put in outside cash into it. I did not. I can confirm from YMAX, I did not put, because I remember this has not been too long ago. It's only been 16 months. I don't have dementia, but I did not put any cash from outside source. This is options. This is dividends from TSLY, AMZY, GOOY, all that source. If we take a look at charts, if you take out my other videos, AMZY and GOOY have been sitting at the same share count. APLY has been sitting at the share count for a while. Most of this income came from AMZY, APLY, GOOY, and a little bit from TSLY and option income. So that $7,824.51 is accurate. It did increase by that amount, but not from cash, but from dividends and options. And that is a 69.17% increase from cash value from year one to year two. And that's technically $8,784.36 earned, or 77.65%. Once again, could be completely inaccurate at 28.01%. And theoretically, the reason I'm just showing these numbers is because if you're doing this and you're a little bit more accurate at tracking everything, these numbers are probably going to be lower. That's one. And two, this is not counting the fact that we had value loss with reinvested dividends, right? There's value loss with reinvested dividends. These numbers are probably completely a lot lower, right? Because these $7,824.51 we put in lost $2,391.41 value, right? So could be inaccurate, probably is inaccurate. I said it before. It says right down here, probably inaccurate. That's why it's purple. But I'm just giving you these numbers. So in the case that you are better at tracking, and you only put $10,000 in, or you only put $100,000, and you never touched, and you never put any more cash into here, and you were doing dividend and reinvestment strategies where you put a little bit there, and you put a little bit there, you stop some reinvestments on TSLY, put into AMZY, stop APLY, put into AMZY, AMZY into YMAX, blah, 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 blah. There's a possibility that some of these numbers might be close to the return you might have. Because, like I said, this graph is based on the drip, on drip, right? YMAX 28.01% is based on drip, right? I don't know. Maybe I invested a lot more in August when the market dipped. Maybe I invested a lot more in that moment. Maybe I invested a lot more into YMAX now when the market dipped. I don't know. I don't know when I bought. I don't know if I bought at the lows. I don't know if I bought at the highs. But this is just what I'm getting from, my fund and the data I have. So in total, we're up 52.30% on the YieldMax ETFs, or $21,173.43. We have a total cash growth from year 1 to year 2 of $15,870.56, or 46.32%. Right? This is going off the data, like I said, from last year. We take a look at last year. That's all the data cash in that we have from last year. You can see 9, 4, 3, 1, 3. Right? This is all the cash value in we had from last year for YMAX, GOOY, APLY, TSLY, and AMZY. So that is that. So now that we've seen how the YieldMax ETFs in my portfolio have performed for 2 years, what are my thoughts on YieldMax? What am I looking to do with these funds? And how am I continuing to trade them? Well, you guys know a lot of these funds, AMZY, APLY, GOOY especially, I've not been adding shares into. They've been sitting at 316, 303, and 334, 335 for almost 3 to 6 months. They've been sitting at that amount. They've increased a tiny bit, like 10, 20 shares over that time span. I have not been increasing my share count in that. TSLY has been getting maybe 25 to 50% of its dividends back into it. The other 50% have been going either into YMAX or option strategies. AMDY's been sitting at 244 share for maybe 3 to 4 months. And YMAX is consistently increasing because YMAX, as you guys saw on the chart, if you're dripping back into YMAX, it's giving you a 28.01% return. So I'm dripping back into YMAX, or actually, I'm not dripping back into YMAX. I'm reinvesting back into YMAX. I'm also reinvesting other funds' income into YMAX. I'm reinvesting into option strategies and reinvesting some of that income into YMAX and QDT and other funds like SPY and JIPQ, but that's not the video is about. And I am increasing the amount of income I'm earning. I'm increasing the amount of return that I have. And overall, I'm going to continue to do that. I stand by my idea and I stand by my opinion that over a certain time period, these funds will pay themselves off. I will stand on top of this hill, even if I'm wrong, and if I am wrong and it doesn't work out and it all goes to downhill and I roll down that hill the same way I stood upon it, I will then accept it at that point and I'll say that I'm wrong. But currently where we're sitting, TSLY is the only one that's kind of done terrible, right? It's done terrible, and that is because of Tesla and because of the way the funds were started. It was the very first fund. Maybe they didn't know what they were doing. They had prospectus changing. They're having another prospectus change coming up right now soon, right? In this next month or so. So they're changing, they're evolving, they're learning new ways to keep value, they're learning new ways to increase income, to distribute income, and to find ways to make these funds work. It's a learning, right? They're learning. Everybody learns, right? So yes, I've lost $5,865.74 in value, or 57.83%. Can it go back up? Yes, it can. If Tesla has a trend upward like Amazon does, then we'll have close to what AMZY does, right? Will it get back to break even? Probably not. Probably not. I don't think Tesla's going to run for 2 years for me to get break even, right? Probably not. But will those dividends continue to pay? Yes, they will. As long as Tesla exists, as long as YieldMax exists, their team continues to trade the same way, and they continue to earn their income. They're making their fees, right? They're getting 1% fees. I don't think they mind continue doing this. So unless the SEC shoots them down, unless the Tesla goes away, crashes, goes bankrupt, and the volatility goes down, the premiums go down, that income will be there. Even if volatility does go down and premium goes down, the income will be there. It might be lower, but it will be there, right? Amazon will be there. Apple will be there. Google will be there. YMAX will be there because it's investing in all these other funds. One fund closes, another one opens, right? There's a bunch of stocks to trade, right? AMD will be there. All these funds will be there, right? It just depends on your time horizon, right? You don't want to take out too much margin and then get margin called with these funds because they will go down, right? So don't want to get margin called and get messed up that way, and you don't want to get out early. The thing I'm seeing with people is that they go from fund to fund, right? You go down negative 10% and you only earned back 5%, right? And then you get out and go to a different fund, but you lost 5%, right? And then they play that fund and then go to a different fund, and now they lose another 3% and then another 5%. Stop going from fund to fund. Stop. It's not financial advice. This is my fund and the way I'm doing this. My opinion. This is all for entertainment. I gotta say this before anything. You know what I mean? Because I know people want to be like, "Oh, your financial advice." It's not financial advice, right? Stop going from fund to fund, right? I didn't exit. I haven't sold any of these shares, by the way. I've only been adding. I've never sold. I've never sold TSLY shares. I've never sold AMZY shares. I've never sold APLY, GOOY, YMAX, AMDY shares. The only shares I've sold is MSFO. And by the way, that was profitable. Not only was it profitable with dividends, but it was also profitable in value. I've sold CONY shares because it wasn't profitable in only dividends, but it was profitable in value, right? Profitable in value and dividends. That's the only time I've sold these funds. CONY, MSFO, valuable in value, valuable, positive in value and positive in dividend, right? Only time I've sold. Only time. But besides that, I'm adding more. If I have income to add more from options or dividends, I'm adding more into it. That's it. Those dividends is not my cash. Sure, maybe it could be used better in other funds. It could be put into S&P and probably get a 12%, 8% return, right? Or it could be put into SPYI and get a 12% return with possible growth as well. Sure, it can. But look, the charts speak for themselves. With dividends reinvested, 47.23%, 60.47%, even APLY, 11.32%, right? That's what SPY returns on the yearly, 12%, right? 11.32 with APLY. JEPQ is 10%, right? GOOY is bad, AMD is bad, but whatever, it could come back, right? We don't, Google's been having a hard time. Maybe the fund manager for GOOY might have a hard time. AMD, we know, has been having a hard time. YMAX 28.01%. JEPQ can't match that. SPYI can't match that. QQQI can't match that, right? So fundamentally, in my brain, it works. It just works. And in 3 years' time, I might be still negative on maybe APLY, GOOY, AMD, who knows, YMAX. YMAX, technically I'll always be negative, kind of, because I'm adding more and more in, and that might drop in value. But the dividends will continue to go, right? AMZY will be profitable in maybe the 3rd year, 4th year. TSLY will 100% be profitable by the end of this year, right? I see it as like a property, right? You buy a house, you don't sell it right away. Sure, you could flip it, but that's a flip, right? But if you're buying it to invest into a home, you buy a home, you're renting it out to earn income, right? Say TSLY is a triplex, right? TSLY is a triplex. AMZY is a duplex, right? But let's stick to TSLY. TSLY is a triplex, right? You bought in, you put in a mortgage, and you're paying off that mortgage because you're renting to 3 people. Those 3 people are paying you, right? And you have enough of that income that they're paying you to take it home to yourself and pay taxes with, right? The value's not going up like a home. I agree, right? It's not going up in value like a home. It could. Misty's doing it. AMZY was doing it for a little bit, right? It could go up in value, right? So treat it like a home. Treat it like a business, right? You put in the money, it's gone. Poof, gone, right? I guess a better correlation would be a business, Right? You put money into a business, gone. Cash is gone. Right? It doesn't exist. You can't pull it out. You bought the assets. You paid the rent, right? You paid the rent for a retail space. You paid for your products. You can't do anything about it now. Or you paid for the machines to create a product, right? The business is there. And now the business is going to be earning you income, but you're not going to be break even until maybe year 1 or year 2. And guess what? You have to reinvest to grow the business, right? The same way we grow shares, you grow your business, right? You buy another retail space, you hire more workers, you get this, you get that. And over time, slowly but surely, then you get to break even. And now that you're in break even, you're profiting and profiting and profiting and profiting. And now you have profits and profits and profits and profits, and it continues to go and compound, right? And that's how I see these funds. It's the same way I see these funds. They're just a business or a property that earns you income. And some of these are even able to give you cash on the side and still be profitable, as we can see on the chart on the 2-year timeline, right? Take out half of 47.23%, you're still left over almost, what is that, 24%, 23%. Take out half of 60.47%, you're 30%. Take half of 28%, you're at 14%, right? Take half of APLY, even 11%. You're at what is that? Almost 5.5%, right? 5.7%, right? So they're generating you income, and they're giving you upside as well. You might not see it on paper on Robinhood, right? -5, -1, -2K, right? You might not see it on Robinhood on paper, but there is that upside. If you look on the graphs and you look at the reality, there is upside to it, and there's dividends with it. So that's just me. That's my portfolio for YieldMax ETF. That's my 2-year timeline of owning YieldMax ETF, TSLY specifically, AMZY, APLY 21 months, GOOY 19 months, YMAX 16 months, and AMDY 8 months. Overall, as you guys saw, we're at 12.05% conservatively in profit. Of course, we had that little purple section, but take that with a grain of salt. I don't think we're at 52.3%, but we could be at 52.3% because before we had the whole Trump election and tariffs, we were up on all time on our accounts by 80%. 80%. So this could be accurate. 52.3% could be accurate because we were up 80% on the timeline. And actually, I don't have it up right now, but I'll put up a screenshot of that. We were up 80%. So on the old time before the tariffs. So yeah. That's me. Thank you so much for watching. That has been my overview of my YieldMax portion of my portfolio and how it has performed in the past 2 years. How the shares have increased, how the value has increased, what the dividends have increased, and how I'll continue to trade them in my summary of these ETFs. You'll see in 3 years I'll still be holding it. 4 years I'll still be holding it. 5 years I'll still be holding it. Unless something happens and it goes completely, if something goes completely wrong with these funds, I'll probably still be holding them as long as they're trading, as long as they're earning income. I'll gladly pay them their 1% fee because they just work for me, right? They work for me. Not financial advice, but they work for me. So thank you so much for watching. I will see you guys next week for next week's video. And that has been the 2-year overview of holding YieldMax ETFs. See you guys next week.